Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Bill Wilton has stopped by once again to share some aggressive growth stock picks that he has with us. He's our aggressive growth stock analyst at Zacks.com. And the first one here that you've written about recently, in fact on the 9th of July, was Genesco, a footwear retailer and wholesaler. And what is that? GCO is the ticker symbol.
Correct. What they do is, like you said, they're a footwear company, and they have several different brands. There's actually too many to list, but some of the most notable are Dockers Footwear, Nautica Footwear. They also have a leather finishing company that's under that parent company as well. But they just reported earnings results on May 28th, and they absolutely crushed it. They reported earnings per share of 17 cents. Analysts were only looking for 3 cents there. So that was obviously very encouraging, and in a very difficult retail environment, their sales were actually up 4% to $370 million on the quarter, which is fantastic. Obviously, that resulted in an earnings estimate spike. Current year earnings are up to 173, up from 156. So things are looking very good for this year, and next year are also up about 10 cents as well to 198. Okay. It remains a good value. It's trading at about 10 times earnings, and the PE or the PEG ratio is just under 1 at 0.8 and change, as you'll see on the next slide. So it is a good value.
There it is.
It is a good value. Year-over-year growth is down slightly, but we'll be back up next year. In this environment, that's something that we're just coping with as growth investors, as everyone out there knows. We're not going to be able to get that sexy year-over-year growth story. Mm-hmm. One of the other reasons I like this stock is that it's developing a very good support level here. You can also see that it's come down a bit, so it's got a lot of room to grow. And there's also a possible MACD crossover forming at the bottom of the chart there.
MACD, what does that mean?
What it has to do with, it's the moving average convergence and divergence. It essentially picks out when a trend is changing. So if this green line is below, it's essentially the short-term moving average indicator. If it's below that red line, then it's a sell. Once it crosses over, that indicates a buy because it's going to be above that line, and that's what we call a crossover. And it's signifying that an upward trend is forming.
I thought you were getting ready to order lunch or something. What do I know? And then RightNow Technologies is another company that you've written about recently. RNOW provides on-demand software solutions.
Yeah, what they do is they specialize in CRM, customer relationship management software. They've got a very unique knowledge base, what they call self-learning knowledge base. It integrates web contact, email, voice communications with customers. So it's able to integrate all those different facets of communication much easier. They work with some big names out there, CBS, TiVo, Jackson Hewitt, and even some areas of the Department of Defense. So they're very widespread. One of the other reasons that I like them, analysts were projecting a 1 cent loss. They ended up posting a 4 cent gain in their most recent quarter, which they reported on March 31st. Revenues were up $3 million to $36 million, and this is their 9th consecutive surprise. So they've been raising guidance, and estimates are up as well. Here you can see they're maintaining their Zacks rank of a number 1. Things are going very well. It seems like it's a bit overvalued, but when companies are at that crossover point, going from a period of losses, which they have been posting losses since 2006, when they cross over into the black, it's hard because you're dividing by just pennies instead of larger numbers. So that's why the PE ratios are hard to use. That's when you look at something more like price to sales, price to book. Also, as you can see here on the chart, I've pointed out a few key events that have happened with them recently. One of them is an analyst downgrade. That's the first bar on the left that I've pointed out. You can see that it opened lower but quickly rebounded off that level of support. What that tells me is that the stock's resilient, that the market likes it, and it's very committed to that level of support. The second one on the right is an analyst upgrade, which is good for obvious reasons. It opened higher and continued higher throughout the day. Like I said, it's a resilient stock. It may be range bound for a bit, But as long as things keep going well, they keep posting more and more gains, I see it breaking out of this range fairly soon.
Do you own either of these two?
I do not.
You can check out some other aggressive growth stocks Bill has written about recently on the Zacks.com homepage in the upper right-hand corner by clicking on the headline that's right next to the aggressive growth listing as you get there. With Bill Wilton, I'm Terry Ruffalo.